Welcome, everyone, to this episode of Manufacturing Talk Radio. I'm Tim Grady. I'm here with my co-host, Lou Weiss. Lou is president of All Metals and Forge Group and the sponsor for Manufacturing Talk Radio, which we are very appreciative of. And if you would like open die forgings or seamless roll rings, go to steelforge.com. Today, joining us is Norbert Ore. Norbert is our senior international correspondent who puts together the Purchasing Managers Index surveys from around the world. He watches those every month and reports here on what those numbers are doing. And Lou, I know you particularly enjoy his scattergram or scatterplot or whatever they call it.
Scattergram.
It gives a great overview of what's happening.
I like everything to be on one page. So here he's got the whole world on one page.
Well, Norbert, welcome to the show. Give us an overview of what's happening.
Okay. We had another good month in April. Our expectation was for a good month, and we got it. Was it as good as March? Not quite as good, but still up in the high 50s. Of course, anything above 50 is growing. So high 50s is where we like to see that be. The biggest change, I think, is that the global economies are starting to keep up with us, from Europe, the UK, et cetera. We're seeing things look a lot better than they have up to this point. In fact, Brexit now has a 70% approval rating in the UK. And you'll remember, of course, they were torn whether they should do that, and there was a very narrow vote as to what should happen. So a 70% approval rating is quite an accomplishment. And it says, as we contended all along, that it was the best thing for the UK to do to separate themselves from the other Euro countries from that. But even those countries are doing well, as I think 6 of the 8 came in growing above 60. So those Euro countries or Eurozone countries are doing well from that. So we're glad to see that being the case. One of the things you always ask about, Lou, is Brazil. What's going on? And Brazil is struggling.
On so many counts.
It's still growing, and I think they have things to work off of and so on in terms of growth in the country and so on. So we'll see what happens there. Then I guess I would look at Australia, China, Japan. All of those are growing, with the exception of China. China is right on the margin. China is just slightly above 50. Now, there's an instance where China is, they contend that they're growing at 6+% growth in GDP. Our data doesn't show them coming anywhere close to that, doesn't see the change. And it's one of the reasons I'm glad we have 2 surveys for China that we can relate to. And then secondly, it really comes down to having 2 of them and not believing either one. Because you got to believe that the numbers are what they want them to be, because we don't, again, we're measuring the rate of change. And the rate of change on the 2-sided China survey is less than 3% ever. And so I don't believe either one of those, but it's nice to get that. I think that for Asia, the Taiwan survey, the Japan survey, the South Korea survey, those in particular paint a better picture of what's going on in China. And you can see Taiwan is growing very rapidly. Well, as much as we see the saber rattling between China and Taiwan, it's still at the end of the day, they are very tied to the hip trading partners. Right now, chips are the big thing. Can you get enough chips? Is there enough manufacturing and so on? Well, a lot of China's chips come from Taiwan to China and then come back in finished goods from that. So I don't think China ultimately is going to do anything to upset totally their relationship with Taiwan. I think they're just simply using Taiwan as some leverage because they know we care a lot about Taiwan for the same reasons. We have a lot of product that comes out of Taiwan. So,
Norbert,
yes,
I want to ask you about the chip situation in Taiwan, and if somebody somewhere is getting caught up, so the American automobile industry here in the U.S. can start putting chips in cars and trucks and getting product onto dealer lots.
Yeah, that's a major challenge right now, Tim. And Intel has announced a $20 billion investment in chips, and several other chip companies have announced large investments and so on. So, that doesn't turn around overnight.
No.
You have facilities. I've been through at least 3 or 4 different facilities, semiconductor facilities and so on. It is huge capital investment requirement. And the fact that the companies don't build their own capacity. They're reliant upon companies like AMAT that come in and they tell those companies what they want, and then they go out and design what they need in order to build the facility. So there's a lot of interdependence. And so it's not going to happen real quick. Like the stories about automobile lots in the U.S., friend of mine, as you know, I'm in Atlanta. A friend of mine is a general manager of a dealership south of the city. They've got 30 cars on the lot for sale. Now, normally they have about 200.
Right.
But in Atlanta, it doesn't make any difference because you don't have any gas.
Well, hopefully we've got that solved now today, Lou. I was able to fill up a tank yesterday to get ready for a trip this afternoon.
Okay. I'm glad to hear that.
So I think we're past now. North Carolina doesn't sound like to me they are. Virginia doesn't, because they're farther up the pipe.
Right.
And they have to, they have to wait for that.
1973, all over again.
Yeah, I have memories of that period of time of being involved, going to the Federal Energy Office and trying to get gasoline allocation for work that we were doing at the time. And so, yeah, nothing that I missed about any of that.
Well, I used to carry with me a screwdriver so I can unscrew license plates and get either the odd or the even plate to get gas that day.
Yeah, well, that's some pretty good engineering right there to do that. I went out and bought a siphon tube yesterday. My granddaughter's graduating from college this week, and she's got to make several trips. And so I got a siphon tube for her that if she needs to borrow gas from somebody or transfer gas from somebody in her travels, she can do that. Now, she's going to have one of her friends that's going to do all of the work with regard to that.
So, Norbert, with Asia looking good, and frankly, the world looks good, and I echo your comments about Brexit. UK is hitting banner numbers in terms of their growth. How is Europe doing?
Well, the rest of Europe is holding up reasonably well. The numbers are up above 60 in most cases, and seems like they're able to maintain that, and they've gotten some of the trade problems, hiccups in the supply chains. They've gotten some of those cleared up and so on. But, you know, there's still a lot of problems. When you ask about the data looks good. But I would also say that if we look at domestically U.S., we've got issues with regard to inflation. We've got issues with regard to employment. We've got some solid things that we've got to deal with. Obviously, the gas situation, you know, was an issue and is an issue until it's resolved. But they've apparently got the code back and doing what they're doing. I just hope we spend enough time looking for some retribution from the folks that are engaged in that kind of thievery. I think we've got to discourage it at a very high level. So we'll see what happens with that. But those things are all, you know, and prices more than anything. We're seeing price increases on lumber. It's probably more on the housing side than it is on the manufacturing side. But it's still bad in both places, in my opinion, that we are seeing the prices go up. The question is, when will they peak? And our ISM prices index was up at 89.6%, which is about as close to 90 as you can get without being there.
That's true.
And when prices are up at that level, they have only one way to go, and that's down. And, you know, as we've said in the past, you know, the cure for high prices is high prices. That people will decide not to pay for something, not to buy something, not to go somewhere when prices reach a certain level. And I got to believe that 89.6% is about as strong as it can get. And the 89.6, I think 93.2 is the highest, 93.2 is the highest we've ever had. So it's getting close. And one of the things you can count on in a change index is it tends to repeat itself as it withdraws or when it starts to grow and when it starts to decline. So, you know, it'll still take a while for those prices to come down. But
what is the gas prices in Atlanta? In Atlanta, if you were to have gas there,
$2.89 to $3.19.
Oh, that's cheap. High test up here is $3.85.
Yeah,
that's 1973 era.
You know, the prices aren't really. The Atlanta market really doesn't try to exploit price issue as much as some others do. They find that the distributors, et cetera, they have more to lose in terms of goodwill with their customers and so on, and all the television stations and others that they know that they're better off not raising prices too much to do that. So it hadn't been a price issue for us. It's been a supply issue.
Well, here in New Jersey, they take the attitude, you want to go someplace, you're going to pay for the gas.
Yeah. Well, you know, if I put my economist hat on, which I don't have, I look at the movement of prices, the best thing we can do is don't control prices. That was a mistake made back in the 70s over and over again, was we wanted to try to control prices. If you let the price float, then there's always going to be gas at some price.
Right.
And it's really simple economics of controlling the price makes less sense than letting it float. And that way those who need gas will identify themselves with their wallet.
So Norbert, in the overall, as Lou and I have experienced many times in the last couple of months, when the numbers all look good, there's less to talk about because the numbers all look good. The only headwinds I see right now are employment, which is going to probably take a while to get people to go back to work, and inflation, that all of the money pumped into the economy for COVID recovery is going to bring about.
Yeah, I think the best thing I've heard is that looking at prices and increases and that type of thing is really already a tax increase. I've always looked at energy as higher energy prices are a tax on growth. And I think that's where we are right now. We see higher energy prices, it's a tax on growth. And that tax starts to work the price back down, assuming that the supply gets picked up, from doing that. One of the questions is, will this change our attitude toward pipelines?
Who knows? Who knows?
And one of the things that most people don't realize, particularly the television stations here in Atlanta, we get a lot of, North Florida gets a lot of its fuel from Tampa, so that we don't go south as much as we go north with the pipeline. And Tampa is serviced by ships and barges coming over from Houston, so it doesn't get shut down. So if you look at the data, only like Florida only has like a 17% shortfall, whereas North Carolina has like a 60% shortfall. So
we should all drive to Florida to gas up.
That would be a start, I guess, Tim.
We'll need tanker trucks.
Yeah.
Norbert, is there anything else that you see in the near term that's going to cause these numbers to soften? Or, as we're hearing from others, this is just a robust economy right now, and it's going to stay this way for a while?
Well, one of the things we did this month in our report that we do is added a thing on capacity utilization. And it's on page 5 of that report. And the capacity utilization issue, there's only 5 industries that where their capacity utilization is above 75%. And those 5 are aerospace, apparel, machinery, food and beverage, and wood products. So there's a lot of capacity that should help control prices, that there's excess capacity still that could be filled from that. And of course, you see the others on there that are pretty significant.
Right.
Okay. Anything else?
I didn't notice that capacity utilization comments. I think that's very interesting. Tim, why don't you tell them where they can get this?
Norbert, what's the easiest way for them to get this report? Although I think it's, sign up, participate, you get the report.
Right. And there's no cost associated with it. And you get some other materials that we put together and so on on economics from that. So the easiest way would be to send me an email at norjore@gmail.com. That's norjore@gmail.com. There's no obligation. It's totally confidential. And the people that participate, we rarely lose anybody because they value the information that we're bringing to them.
Well, Norbert, we always appreciate you being on with us to share this information, because I think it's the only place where you can get a picture of the global PMI surveys that you follow. And that's an exclusive here on Manufacturing Talk Radio. Thanks for being with us.
My pleasure.
Have a good one. Stay healthy.
Thanks. You get too, guys.
Bye-bye. Go get some gas.
Yeah, all right. So be sure to participate in the survey. And while you're on the web, go to jacketmediaco.com, where you can find links to this show and all of our other podcasts, also our e-zine Manufacturing Outlook, which is a free subscription. And as always, thank you for listening to this episode of Manufacturing Talk Radio.